Hey, welcome everybody. It's Rain King Insights. I'm going to be giving my general market update on Thursday here, January 30th, because I'm traveling again on Friday. So let's get into it. It's been a big, eventful week. All right, the presentation is made by Rain King LLC for education purposes. Here's our agenda. We're going to get into the indice action. We're going to look at the sector rotations. We're going to ask ourselves the question, with all this deep seek stuff, is the AI bull run over? We're going to look at that closely, and then we're going to look at the opportunities and give you some watch list names that are looking fairly good, and then wrap it all up. All right, the indices. This is the S&P 500. Um, you know, the last month, has been very choppy. If you look at these candles very carefully, a lot of gaps. It's been a very gappy month. Gap up, gap down. It's been choppy. The market looked like it was going to really go last week, and then we had the market shock on Monday. So there's a lot of things that are being digested. There's a new administration. There's repositioning done by funds, as well as the DeepSeek news. So it's been a little jumpy and volatile. Now, the good news is the new highs are still pervasive, even amidst all of this kind of bumpiness and turbulence. Under the surface, we still have new highs. So that's really a positive sign on the breadth front. You would think that with Monday's drop in tech, which was a black swan event in global tech, you thought maybe new highs would really start to get in trouble here, but things are still positive. Now, switching to the NASDAQ composite, again, we mentioned we had a couple of good accumulation days a week ago, and then now we've been hit with a couple of distribution days. So the NASDAQ is naturally weaker because it's more weighted in the tech names. Now you can see that the new highs, new lows, it's a much more muted, but if you look subtly, there's still net highs even on the NASDAQ, which is probably an incredible win when you consider the wreckage that tech took on Monday. So that's all I really want to say about the indexes. We're going to talk a little bit more deeply about some of the rotations we're seeing. So participation. This is from 2 weeks ago. 2 weeks ago, we were really looking closely at the chip stocks, the semiconductors, and we were looking at these relative graphs showing that semiconductors were outperforming IGV, which was software. And you can see semiconductors looked like they were going to reassert themselves 2 weeks ago, and it was very positive, the relative strength versus general tech. Well, that's all been down the chute now with the tech wreckage on Monday and NVIDIA getting clobbered with a 17% gap down. So now we should start to look at this the other way. Here is software, the hack ETF, and I'm looking at dividing that by the semiconductors. And you can see this is the period of time when the line is heading down. That means cybersecurity is underperforming the semiconductors. And that's where looked like semis were going to reassert themselves, but that's all changed. So now you can see that cybersecurity has bolted to new highs relative to the semis. Same thing with IGV. This is the software. Software is now reversed up. All this business about DeepSeek. If there's innovation that's going to make AI more accessible and cheaper to produce, that's going to be huge opportunities for software companies and entrepreneurs. So in the end, some of the deep seek news is really just innovation that you see whenever new technologies are rolled out. So let's get to this question. Is the bull run over? Somebody, you'll see people say, well, this is over. The semiconductors are, shot, and maybe DeepSeek is really going to pierce some of the AI move. Now let's step back a bit. Bull markets really top in two different ways. One, there are distribution tops. And by that, I mean, you'll start to see individual stocks that start to top out, and they gradually expire one by one, but it goes on for many months. And we're going to take a quick look at the 2007 top and the 2021 top, where this gradual topping process takes place. Now, other things that can happen is you can watch sectors. Sectors will top out one by one as a bull market gets mature. Now, we're probably in a situation where maybe the chips have completely topped out. Maybe they're not going to recover their June highs. And maybe NVIDIA itself, its top was in June, and maybe it's going to need to really do a lot of work to repair the damage. But even without chips, I think we need to understand that there's other sectors that we're looking towards to see if there's leadership, as I mentioned, like software. Now, the second way a bull market can top is really a climax top. These are kind of less common to see, particularly in the index, really a blow off. This is where you start to see all stocks really get into a frenzy, and most names start to top out and go into climax runs within a 2 to 4 week period. Probably the best example of a blow off top is the NASDAQ and the 2000.com top. Within 2 to 4 weeks ahead of that top in the NASDAQ, all of the big tech names were going into climaxes runs in one fell swoop. It was a very crazy time. Now, I've mentioned before in these videos, bull markets survive on participation and rotation. So let's look quickly at the 2007. This is the market topping process, and this is looking at sectors. And I'm just showing sectors. You'll notice that the speculative sectors, the small caps, the mid caps, and the micro caps, they will top out well before the market completes its ultimate bull market top. And you can see they topped out 3-4 months ahead of the bigger Qs topping out and the NASDAQ composite and large cap stocks topping out. That's how it unfolded in 2007, gradual distribution across the spectrum of sectors. Now here's the 2020 market and the topping process as well. You'll notice again, speculative names, IPOs topped out way back in February of 2021, though the market didn't peak until way back until November, December of 2021. So there's quite a lag. You can see small caps topped out a good 7 or 8 months ahead of the large caps. And the number one group in the 2020 COVID bull market really was enterprise software. And you can see enterprise software topped out in February and it never recovered its highs. It's kind of reminiscent of this accelerated run, just like the semiconductors had in 2024 into June of 2024, and the semiconductors have not recovered and rolled back on Monday. So this is a gradual topping process that can happen. Now, here I'm just pulling up the 2023 to 2025 bull market, the cycle that we're in right now. So here's the semiconductors topping out in June. And that's been this big head and shoulders process. Now, what's interesting, and this is where we really want to look at what is the health of the market. We talked about breadth. The breadth is still strong. You'll notice that software and the Qs and hack, which is cybersecurity, these are all near new highs. So it looks like these could reassert themselves as real leadership sectors. And that's a very good sign, given that the chips are falling down. Now, here's the IPO market, still close to new highs, this blue line here. And with the rollout of more accessible AI, you're going to see a lot more innovation in IPOs, I would imagine, over the next year. Here's small caps in pink and mid caps in pink, and the small caps are in the black. Have they topped out as part of the market cycle? Maybe not. They really have not had a run. They've been pretty much struggling for at least the last year and had a lot of false starts. So what I'm trying to point out here is this picture does not look like the other two pictures of market tops. It doesn't appear that we're at a market top, not with the breadth the way it is, not with the advanced decline line where it is. So I still think this bull market has more room to run because we are seeing rotations. Now, here's just an example. In 2021, you're going to start to see, as you gradually get to a top, you'll start to see the leading stocks actually peak out and top out. So here are the names. Here's apps. Digital Turbine, Roku. This is on the chart of a NASDAQ line chart when they actually peaked. And you can see there's a rolling number of stocks that peak out over many, many months before you get through the process. Tops are really a process, and these leaders kind of expire one by one. We're not seeing that in bulk yet. There's no doubt that the chips have been hit hard, and some of the infrastructure stocks like Vertev and some others have been hit hard, fix, but we're not seeing a consistent rolling yet in my view of the market. So let's come back to the internet of the 1990s. I went back and I was just trying to look at how things evolved because I lived through this. Now, and how it compares to artificial intelligence. Well, the internet started back in essentially the World Wide Web became available to retail people and consumers in 1995. And things really opened up this kind of super highway that was called the intranet. And 1995 is when Netscape came public and they created the first browser to actually browse on the internet. And it was very, very primitive at the time, but the way you would dial into the internet was through your telephone line, and modem companies like US Robotics and 3Com. Those are the modems that made those screechy sounds that got you connected through your telephone line into the superhighway intranet. Gradually, Cisco, really started to connect computers. They become connected, they were routing, and were building off of this new infrastructure. And everybody was starting to get online by 1996. They was very primitive, but CompuServe, Prodigy, and AOL, believe it or not, you got a disk that you paid $10 and you could get 5 hours a month online. So really interesting. And about a year later, actually AOL bought CompuServe and acquired, a user base of almost 12 million users were online by 1997. Then we had innovation. Yahoo created the first web directory, chat, email came on board. And then it wasn't until 1998 that this infrastructure really took hold. And that was with fiber optics and broadband and JDS Uniphase and Lucent and Nortel and Broadcom really laid down a lot of fiber so we could open up new applications to this intranet. Things such as streaming. Broadcast.com was one of the first streamers of news. And then it was in the late 90s, where really video and graphics were able to be improved on a fiber optic network, and e-commerce shopping saw its early days with Amazon and eBay, etc. Ultimately, though, 98 through 2000, over this 5-year period, 98 through 2000 was really this super markup phase where stocks went crazy vertical. Eventually, we all know there was the dot-com bubble burst. There was an oversupply of routers and fiber and busted business plans. But it was a powerful first 5 years of the internet. But obviously, that was not the end of the internet. There was internet continued with innovation all the way out until today. Now, if we look at artificial intelligence wave, this first wave of infrastructure, and I'm going to use 2022 as really the initiation where NVIDIA's powerful chips allowed these large language models. ChatGPT got released in late 2022, and then Google and Meta with their models, et cetera. And then throughout 2023, we saw the hyperscale data centers be really a priority, and companies that provided cooling and racks and thermal cooling really did well in 2023. And then early in 2024, there was a realization that power was going to be needed for all of these hyperscale centers. And we've seen electric power, companies like Vistra and GE Vernova, as well as the promise in the future, I'll say, of nuclear power from some of these other providers. So, here we are today, we're in early 2025, and we get this DeepSeek news of large language models, and people are wondering if this is really, going to disrupt everything and kill the AI innovation. Well, I really don't think that's going to happen. There's always going to be disruptors. There were disruptors all through this period, companies that go out of business and companies that are successful. So innovation, when we have less expensive access to technology, small entrepreneurs, and these software applications are going to keep rolling out. They'll probably roll out AI applications more at the corporate level, and eventually there will be more applications developed for retail consumers. So if you think about this period, we're only a couple years into the infrastructure phase of artificial intelligence. There's so much more to go. And as I mentioned, this was the first wave of the internet, this 5-year period, and then the internet continued with innovation for the next 20 plus years. So we're still at the very early stages of artificial intelligence. As I've mentioned before about the bull super cycle, and I had this chart that I've used at the IBD meetup in October, where I mentioned that this long super cycle could take the S&P to levels you wouldn't think possible. I do think the super cycle is going to last until 2035. It's being driven by the millennials as a mass group of people in their prime earning years. So, we're here. I think there's so many mega trends that are really strong. And when you go through, a growth period, there's going to be potential bear markets. There's going to be bear markets along the way. 2022, bull markets typically last 2 to 3 years. Who knows? Maybe in 2026 there'll be a bear. Somewhere out in 2030 there'll be a bear. The build out of the internet went through a bear market in 2000 to 2003. Then we had a bull phase. Then we went through a bear market in 2008. And then we went through another bear market in 2020. So a super cycle in a new technology such as AI can go through bear markets. There's going to be peaks and valleys. So I believe the super cycle is still in place. Now let's get to some rotational ideas. Let's go over what's working and where we should be paying attention. So if we're studying some of these strong rotations in the market out of chips and maybe infrastructure, where should we be fishing? So I think that right now in the short term in the penalty box, the chip stocks, NVIDIA and Broadcom and other chip equipment makers are kind of out of favor right now, and they're going to have to repair a lot of damage. Now, some say the power companies are also damaged. They certainly took a major hit on Monday. I would challenge you to look at them again and look at they're damaged, but they're not broken. And we're going to look at a couple of charts. And I say that because they didn't undercut their prior lows, and they've also gotten support at their 10-week moving averages. Now, the other data center stocks and connectors, these names seem to get hit very hard. They haven't really bounced that well, but the power companies have bounced. So where is the money going? Where are the opportunities? There's really opportunities in software. There seems to be data warehousing companies that are going to be more valuable with access. Cybersecurity you mentioned, and even retail and payments is doing really, really well with stocks moving to new highs. So these are some of the names that I would put on your watch list. Many of these stocks are acting extremely strong. Twilio, HubSpot, they're really, really acting strong, and they're hitting new highs. So even with the shock of Monday's market swoon, these are stocks that are moving and look like they're poised to move out of bases. Snow, Elastic, Confluent, they look like they're ready to break out of bases. CrowdStrike hit a new high, and some of the others are very close to highs like Rubrik. And the payment stocks are also, some of them are in bases. These look like opportunities, so we don't want to take our eye off the ball, and we just need to move with the market and move from sector to sector. So looking at some charts, this question about are the power stocks dead? Well, here's CEG. These are weekly charts. And I preface this, the week's not over, but so far, these stocks have gotten support at the red line, which is the 10-week moving average. Great support. And right now it's closing up near the top of its range. We'll have to see how we get through tomorrow. GE Vernova. This stock came all the way down and has acted really well. Which really I like about this stock is this line is at 363. This is the $100 billion valuation of the company, and we broke out of that base and moved higher. And the fact that when the stock came down here in Monday's Black Swan event, There obviously is support for this stock with big volume pushing it back above. Institutions believe this company is worth at least 100 billion, and most price targets show it worth a lot more than 100 billion. Good sign there. Now, Vistra is also doing the same thing. Big support. Hopefully, we can close the week there. And these look like big support weeks for these stocks. So, power stocks are probably not dead. On Holdings, broken out of a little structure at new highs. This is in kind of the e-commerce and retail sectors. Globe, GLBE, acting very, very strong. Relative strength line at a new high. These are stocks you might want to take a really good close look at, understand the story more, but they're pushing to new highs, and the relative strength lines are also at new highs. So we don't want to ignore those. Twilio had a powerful gap up and really a catalyst gap up on news. They pre-announced their earnings. You can see that the relative strength line is at a new high, acting extremely well. CrowdStrike, which was taken for dead last July and August, has come all the way back, and this is actually a breakout at new highs. So the relative strength line is reflecting cybersecurity stocks are back in favor and doing well right now. Two more. Here's Snowflake. I mentioned this before. It's in a little bit of a base. It's pulled back. Maybe it's forming a little bit of a handle here, but you can see the nice relative strength on the right side of the base. Members of Rain King Insights have bought this stock and hold positions. We had 2 entries that are down in this range. Stock acting well, looking poised for a breakout. Confluent, this is kind of a database aggregator of data related to AI, forming a base. It had a big day a couple days ago on Tuesday as a benefactor from lower cost AI. And it looks like it might be forming some sort of handle here. So a couple of really good names to put on your watch list. So let's try to wrap this all up. Despite Monday's shock to the market, the S&P and the NASDAQ are still very close to all-time highs. So that's very positive. Also, both the NASDAQ and the S&P are gotten back above their 20 exponential moving average. That's pretty impressive after what we saw on Monday, which took a lot of people off guard. New highs and new lows. The new highs are stronger on the S&P right now than the NASDAQ, which is kind of expected when the chip stocks were really, really decimated on Monday, as well as some of the other infrastructure connectors and hyperscale stocks. Now, the leading stocks, we certainly saw some birds shot out of the sky, but the positive is we have not seen institutions throwing all stocks overboard. What we are seeing, which is incredibly positive, is we're seeing rotation into those other groups and sectors, as I mentioned, software and data warehousing, as well as e-commerce. So that is a very, very positive sign because, as I mentioned, bull markets live on rotation. So exposure levels, we were at 75 to 85%. I would say they're the same, and you might feel like you've gotten hit very hard. You've probably had to sell stocks. If you were in chip stocks or power stocks or other tech names, you probably ended up selling things and throwing things overboard with the panic on Monday. But we want to be redeploying in the coming days and weeks. There are new opportunities that, as I mentioned before, that are emerging right in front of us with stocks showing great relative strength. We will be looking at that for our focus list next week at Rain King Insights at the Rain King level. And despite a Black Swan event that we saw on Monday, which can be very tough psychologically, this is where we talk about traders having grit and resilience. This is where you got to regroup. You got to regroup mentally, and you got to bring clarity to looking at the new opportunities, because this bull market does not appear to be over from what I see. So there's still opportunities. They can knock you down, but you got to have the grit to get back up. Quote of the week is from Chris Shavako. Patient pays in bull markets, especially in secular bull markets. And we are in a secular bull market. That's the general market update for January 30th, 2025. For those of you that want to learn more about Rain King Insights, please go to our website. We'd love to have you join and get all of this information on a weekly basis, as well as my focus and watch list video on specific stock setups each Monday.